Adam DeSanctis. Welcome to MBANow. I'm here today with Ashley Wood, Senior Vice President of Mortgage Verification Services at Equifax. Ashley, thank you for joining me today.
Thank you for having me.
So your title kind of gives away a little bit about what I want to talk to you about today. What trends are you seeing in income and employment verifications, and how do these trends impact lenders and consumers?
Absolutely. So last year, the labor market appeared to be softening from the 2021 Great Resignation, during which we saw record job openings and very low unemployment. However, now job openings have edged down slightly, and the number of new hires has declined. We've also witnessed widespread layoffs at companies across many industries. With trends changing on nearly a monthly basis, lenders are left to navigate really very uncharted territory. For consumers who may be experiencing employment changes and the inflation rates impacting U.S. households in a major way, they're having to dig deeper into their savings to maintain normal spending habits.
Yeah, and certainly you see that in the numbers. And MBA, we're also forecasting for an uptick in unemployment this year, but still, relatively strong labor market overall. What do these trends imply for this year's mortgage market? What are you guys predicting?
Well, from job openings dropping and then unexpectedly rising to new demographics of borrowers emerging, really no one can say for certain how the future of the U.S. economy or even the mortgage market will unfold. Though one thing is certain, now more than ever, lenders need insight to continue making responsible lending decisions confidently. Mortgage lenders must ensure that they have the proper tools to keep up with employment trends and appropriately evaluate a borrower's financial health. Through leveraging traditional data sources alone to gauge credit worthiness may really unintentionally exclude qualified candidates and limit opportunities to be extended credit or be presented with a lower interest rate. So I can't really say for certain what the mortgage market has in hold, but we know we go day by day.
Yeah, that's a very good point you made there. And what are the common methods of conducting verifications that lenders should consider improving in this market?
Absolutely. Of course, there's instant secure digital verifications from the work number. But believe it or not, some lenders are still relying on collecting paper documentation, such as pay stubs or a W-2 directly from the applicant. That can really put undue burden on consumers' access to deliver that information back to the lender. And also, it's not fraud proof. Unfortunately, lenders that use this information and have this process really make themselves vulnerable to misrepresented or even completely falsified documents.
So Ashley, it's winter right now, but baseball is right around the corner, and I kind of want to throw an inside baseball term at you. Consumer permission verification. It's sometimes also referred to as bank transaction data. That sounds ideal for a lender who needs quick information about a loan applicant's income and employment. Do you see any potential challenges with that method of verification?
Consumer permission verifications for employment and income does seem like a viable option until you really consider that once again, the verification burden is placed back onto that consumer. Let me give you an example. So instead of tracking down the requested documents, such as a pay stub or a W-2, the consumer must provide private banking credentials or find out who manages their employer's payroll, and furthermore, be willing to share that sensitive login information with the lender. The consumer credentialed or permission verification can introduce a great deal of friction as well. And that's not only to the lender, but it's also really on the consumer. It can also add an element of risk to the employee, employer, and payroll provider by introducing a consumer's payroll login credentials to a third party.
Yeah, definitely a lot of things to focus on there. Now, final question, Ashley. I've really enjoyed this conversation. How does the work number help mortgage lenders get the data they need without resorting to relying on consumers?
The work number, with having over 2.5 million contributors and the number of instant payroll information available daily, does provide a digital income and employment verification with no additional action from the applicant. Mortgage lenders who want to remain competitive while giving their customers the best opportunities for financial growth in our very fluctuating economy should harness the power of instant verification data to really minimize that risk that we talked about earlier during the decisioning process and to open opportunities to new consumers. Utilizing alternative data like income and employment data from Equifax may permit lenders to grant access for credit for members of underserved communities and even non-traditional workers such as the gig economy. Instant employment and income data can also enable lenders to strengthen the accuracy and efficiency with which they evaluate a borrower's ability to repay a loan, which further protects their organization from default or foreclosure.
That's a good point there, Ashley. 2023 is shaping up to be busy, challenging. Throw out any adjective you want there, but in any case, I know you and Equifax will be engaged, and MBA will as well. Thank you for this interview.
I really appreciate the time today. It was a pleasure to speak with you.